Good morning, ladies and gentlemen. This is Clueless 8. This is the pre-market AM report for a week ending Friday, October 16th, 2015. It's been a volatile, hectic, confusing, and a dumbfounding week. And throughout all that volatility and intense algorithmic high-frequency trading operations throughout the day, Clueless 8 trading members, traders, free trial subscribers were guided through in a precision and effective fashion. Trade alerts were posted on a timely manner. Market inflection points were alerted. Caution was suggested at certain times. And very large profits were booked. The chart behind you that I've shown repeatedly, and I will keep on showing, is a chart of what your trading books are. And that's the S&P 500, SPY, the market in general. At this juncture in time, a couple of quick important observations. October is an extremely volatile month. We have seen it now. We have seen it for the past couple of weeks, and we'll see it as we get towards the end of the month. There is no certainty. There are only probabilities, and my very precise technical charts have provided a focused guidance as to where I think, i.e. forecast of what the market might be doing. Daily forecasts and intraday forecasts are extremely difficult, if not almost impossible. However, throughout all that, I try to do that because I know it's extremely helpful for people to keep an eye on the road. Let's take a look at this chart pattern here that we're looking at. You're talking about the big crash in August. You're talking about the move up here. This is the Fed reversal day, the Fed fake out as I call it, 17th of Thursday, 17th of September, right after the press conference, 3 p.m. The pullback pretty much exactly to the lows of August. And by the way, all this has been charted, forecasted pretty accurately throughout this whole movement that you're seeing. And get the drawing tool out here. We have a large gap here that I keep on showing through this white box. That gap's around 207, 208, roughly 2070, 2080, around there on the S&P. And this gap at one point will get filled. However, it is never a straight line, and nothing in the market is 1 + 1 = 2. And I think by now, a lot of traders and members who have been with me know that very well. Do not expect easy answers. It doesn't always mean that if you buy the critical lows that you're going to make money. This was a critical low. Yet it broke down further, created a double bottom. And then a dragon bullish. People rushing in here at the top probably got stopped out here. But if you stuck to these charts, then you stayed with the trade, long and short. So let me just go over this chart again because it's extremely important. So here we are, where we're moved up now, and we're engaging this very powerful 203 level on the SPYs. Overcoming this resistance is not easy. Neither is it that difficult. Because what we're seeing here is a pattern, if you notice the channel here, and then we had that Walmart massive pullback. I kept on saying nothing changed, and I was dead right. Because that Walmart pullback was a very serious issue. A lot of fund managers own Walmart as their core position. Don't ask me why, but that's just the way it is, right? Largest retail company in the world, blah, blah, blah. So, the Walmart pullback happened. People freaked out. Look at my end of the day report. I kept it short and sweet and straight to the point. Talked about a lot of scared, confused, and very confused traders. Said stay calm. Selected buys. We did. And it was a monstrous day yesterday. So here was yesterday. This was the Walmart sell-off, and this was yesterday. So now we're going to go hit this 203 level, which I believe will most probably happen. Could happen today. Let's just put it this way. Once we hit there, there's a natural move, because that's also cash settlement on the S&P 500, that we pull back. So what would be a textbook classic scenario for the bulls? The textbook scenario would be that we pull back here to about 199, engage the lower end of the megaphone right there, which also is the upper gap fill here, okay, where we find support. Remember, my lines are not drawn just at a figment of my imagination. They're drawn because there are past patterns, and past patterns are basically investor behavior, algorithmic high-frequency trading behavior at those certain particular specific levels. Some people call it supply zones, demand zones, you name it. Whatever the case may be, these are inflection points. So this was an inflection point right here. There's a large gap here. Okay? So that gap was obviously filled back around the first part of October. We broke out, tested the upper gap as support, and now we're getting up here towards the upper end of the resistance. Keep in mind, very importantly, that the pattern symmetry of this very large dragon bullish pattern, or W pattern as I call it, throughout this, I'm running out of desk space here, ends here, and somewhere around 2080, 2090, close to 2100. Keep that in mind here. That would be the full completion of the pattern symmetry from A to, let's say, B to C to D, 5 waves, right? E, right there. A, B, C, D, E. Now, the difficulty is for traders with very short-term time horizons is the fact, and a lot of other volatility factors that come into play into October. Don't forget that October is the end of the fiscal year for the 800-pound gorilla, the 800 trillion, and God knows what the number is, of the mutual fund industry. So they do a lot of adjustments, lots of buying and selling to adjust and window dress their portfolios. So you get intense activity in October. That's why October is normally the worst month and the best month, in the sense that it ends up positive. We'll have to we'll have to understand that clearly. I'm going to be there to guide as much as possible, but keep in mind that you should be aware of your own books as you're trading your positions. Keep your positions tight. Keep them light. Don't have to go in that big, because the returns we're getting in the range of 100%, in some cases 1,000%. I mean, that's an outlier, obviously, with the SPX calls, the 2020s that I predicted that the market would get to 2020, right? Those are obviously outliers. You don't need to go into there really large on something and then over the next 24 hours that gets blasted. Netflix, for example, small position, so it was a loss. The after hours buy at around 96, that was great. So that mitigated a lot of those losses. No one's asking anyone to go in really crazy. All right. So every single stock that I've mentioned overall, whether it's Amazon, whether it's even Netflix or Tesla, Facebook, Alibaba, even Wynn before yesterday's earnings and the drop we're seeing this morning. All these stocks, just mention a few, have hit exactly, and in some cases beyond. Oh, not to forget Priceline, exactly what I showed from weeks ago. So keep that in mind. We are getting we are overbought here. There's no question about it. But it can stretch out a little bit. So let's get to this chart here. So at this point, the perfect scenario would be a pullback down here, and then that creates, that creates a nice, again, another nice sort of dragon bullish pattern, and then this, which would be this segment of the move. This segment of the move would be this segment of the move over 203 up towards the 208 level. Between here and there, to close this gap, there's not a heck of a lot of resistance, if you notice here, okay? There's not a heck of a lot of resistance. So this zone here that we're looking at is kind of a free fly zone, as I like to call it. And the free fly zone is going to be rather rapid and fast. It could be propagated, and the catalyst could be some news coming out of China that they're not only seeing stabilization, but they're seeing growth, all kinds of stuff. Okay, so and a lot of this can happen overnight. Keep that in mind. So you have to have some positions, long positions in the form of the indices, in my opinion, that can be left out there and hedged accordingly as needed. So that's really what it is, okay? So this full pattern hasn't resolved itself. Here's the bearish scenario, and let me just show this out clearly. The bearish scenario would be that we drop here, we fall below the lower arm of the megaphone, and in that case, the uptrend retest of this downtrend line at 194 comes into play. Of course, there's a gap here if you notice. Remember, you always have to be trained for this stuff. This gap hasn't been filled yet. Is it possible that this scenario that I'm showing you happens over the next 7 to 10 days? Yes, it is very possible. And even then, it's not necessarily negative, because what that's going to do overall is going to bring us deep into oversold conditions, scare the living daylights out of people, and it's going to create something of a slingshot effect again. If 203 is the intermediate top for now, then in that case we'll fail there again, come back down towards 196, and attempt to break out again over this. So that's the other scenario. The real bearish scenario is that we fall below this gap at 194, and then see you later. You're going to be testing the lows again. Somebody asked me, do I expect that to happen? I said I expect anything to happen. Like I say, I'm not amazed by anything anymore. There could be a slew of different domestic and international economic factors, news, surprising stuff like black swans, like Walmart's press conference and their detailing of their large-scale plans and all kinds of stuff that can derail the market. So is it possible that we do a triple bottom? I would love it. A triple bottom would be more than welcome. Would it shake the nerves out of major, of all investment stuff, which already has? I put out an article out there by Credit Suisse, which talks about the fact that almost all investors are scared, terrified, and are sitting in cash. No wonder we get these monstrous rallies and short squeezes that we're seeing. So here we are on the 1 hour chart. We're quite overbought, and overbought means we can also stay like that. We can stay overbought for a couple of days. My gut tells me if we stay strong today, then we will basically go into next Tuesday with the strong bend, and the market could very well at that point create a mini breakout. And if I'm right, no, there's no gap here. Then we could hit like 2040. Let's take a look at the 4 hour chart here. Very important. The 4 hour, as you can see, that's a massive bullish reversal. That's a fantastic looking candle. So this candle wants to punch up here, right? Right there. Right there, the Fed reversal. It wants to punch through the Fed reversal, and if we follow the Bollingers and the acceleration bands, which is this green line, and this is the Bollinger Band. For people who are new to my service, look at the keys up here, and it'll tell you. So the upper Bollinger is around 204.40, and the acceleration band, which is certainly accelerating higher, is around 203.19. So on all fronts, especially on the 4 hour, we're certainly moving. We have room to move higher. Could very well happen by Monday, if not Tuesday. On the daily, what we're seeing here is we're engaging the upper end of the acceleration band, 202. Still a positive chart, no question about it. Okay, it's a bull flag consolidation channel. Now the bull flag's breaking out. You can look at it like that, right there. You have this channel here, and it intersects up here at around 204.69. So again, on all technical fronts, and this is nothing wrong here. This is moving sideways in an overbought position, going back and forth between sell-off during the day, but it's overall staying positive. If this 50-day was engaged, and people were freaking out the other day, I told them to calm down on Wednesday. If this 50-day was broken, then obviously we would test the downtrend line and the 34-day moving average at 196. But it didn't happen, right? On the spikes. We went the other way. We held this upper gap. That's really what happened right there. See that? So what I'm getting at is there's a lot of good trades out there. Earnings are coming out. We're going to play all the good ones, in my opinion. Play it small. And we get some huge hits, like we did with Goldman Sachs. And then you get some misses like we got with Netflix. But overall, net, the market is good. And this megaphone pattern, believe it or not, I know it sounds crazy, but I've seen this stuff happen before, has a good possibility that it gets back to the highs of 2100 plus 2130 on the S&P. That's what megaphones do. But before that, it might do this type of stuff. That's it for now. Thank you for listening.